Good afternoon, everybody. Welcome again to the February 2023 webinar for Metalla Royalty. Again, for those of you that don't know me, my name is Brett Heath. I'm the president and CEO of Metalla, and we trade on the New York Stock Exchange under the symbol MTA, and also on the TSX Venture under the symbol MTA. So we've got a lot to cover today. Very excited about this update. A lot of advancements, a lot of great things happening within the portfolio. I will like to draw your attention to a new form of communication that we have just started with investors. These are called asset alerts. These will be 2 to 3 great updates within our portfolio that we'll be sending out only through the company's distribution. So please make sure you're on that. You can sign up on the website or send your email to Christina, and she'll make sure to get you on that. Now, I will be making some forward-looking statements, so please understand those risks. And before we get into it, for those of you that are new to the Metalla story, we have, over the last 6.5 years, had a very clear and concise strategy that we've executed on. And that was to give our investors exposure to the highest quality assets on the most proven geological trends that are being advanced by the biggest mining companies in the world. And the way that we've been able to do that is we built what I believe is one of the most efficient and one of the most effective platforms in acquiring royalties in the third-party market. This means we're buying these royalties from third parties, not these big major mining companies, which allows us to get exposure on an accretive basis, I might add, to these incredible assets. And so over the last 6.5 years, we've now done this 31 times. That's an industry-leading 31 times. Through those transactions, we've acquired 85 royalties. We've got a huge portfolio. I might add that most of those are in development, and through all of those, we've deployed approximately $170 million US. Now, our approach to this business has always been more of the sniper rifle approach. And the way that we look at these acquisitions and the way that we look at kind of finding these different assets that we're buying, we not only want to understand all the technical aspects and so forth with the asset, but we want to know where that asset is within the mining life cycle, where that asset really sits within these major mining companies' development pipelines. And I think most importantly, kind of where it sits within these proven geological trends, because historically, the biggest impact to shareholders has always been from these big upside surprises. And if we can buy enough assets with all of these characteristics, we feel that it's going to significantly increase the odds for these home runs. We feel like we do have a few of these already in our portfolio, and we'll talk about them a little bit later. But a lot has happened over the last 6.5 years with the landscape of the business. And I think it's important that we touch on this, because when we started this business, there were a couple other peers within our bracket, and that quickly grew to upwards of a dozen. And now we're back down to a couple other peers. And it's actually interesting because when we looked back, actually the October 2020 webinar that we did, we talked about this. We saw a lot of M&A pressure coming into the business. This was being kind of driven by the actual sustainable business models within the royalty sector, primarily being the capital providers, the big companies that provided money in exchange for the royalty. That business was kind of shrinking. It was putting more pressure on growth for those companies to grow. And that was a really, we feel had a lot of pressure on this M&A theme that we've seen. And one of the things we said back in October 2020 was we felt that Metalla was in a position of strength. And that was so critical, because if you're not in a position of strength, if you're not thinking about all these things ahead of time, then oftentimes if you're vulnerable, these are the companies that often get picked up or merged, or other things happen where their shareholders aren't able to capitalize on the next cycle, capitalize on the opportunities that are in front of us, that I think Metalla is positioned incredibly well today. I mean, we could not have dreamed of a better opportunity. Now, 6.5 years in, we've got 85 different assets. We've got a huge growth portfolio and pipeline that we'll discuss a little bit later. But again, in a position where, our strategy is really only improved in regards to our business going forward. Now, one of the most important things to understand as an investor, when you're investing in a company, is really the underlying value of the company. So the actual value of the assets within the business, and then the share price. And the share price moves up and down on a lot of different metrics that happen, whether it's a lot of volatility or bull markets or bear markets. There's a lot of influences that can happen to the share price, but the actual underlying value of the asset is really that core metric that you want to look at. And in the royalty business, there's one evaluation metric that I believe is the most accurate for the companies, to the largest all the way down to the smallest. And this is called the net asset value per share. Those last two words are so important, per share, to you, the investor, because if you're growing a business in the royalty sector and you're just growing because you want to get bigger, oftentimes your actual NAV per share, the market cap might go up by 2, 3, 4x. You might become a very big company, but the actual value per share, as we've seen, sometimes will decrease. And so focusing on increasing the actual underlying value of the business, the NAV per share, is something that we've always focused on in all of our transactions. And it's something that we've executed on very, very well. And since we've had analyst consensus coverage, we've seen that go from back in 2019 or summer of 2019, from about $4 all the way up to a little over $8, or about a 22% compound annual growth rate in our NAV per share. Now, why is this important? Well, this is important because at certain times, the share price can be up a lot higher, as we saw back in 2020, and certain times it could be down a lot lower, as we see today. In those opportunities, that arbitrage is what you want to capitalize on as an investor, because these things tend to swing up and down during bull markets and bear markets. Right now is just an incredible opportunity to capitalize on what we've been able to build through this bear market. At the same time, the value, or the share price, the ability or valuation that you're able to buy the stock at, has only been more attractive. And we've been able to see this when compared to peers. If you look at the NAV per share, again, the NAV per share growth of Metalla versus the peer group over the last 4.5 years, again, it's been something that we've been able to excel at. And again, this goes back to our strategy, our platform, our effective and efficient process to be able to source new high quality royalties with those characteristics on our own, outside competitive processes, being able to deliver you, the shareholder, that accretive value. And we believe that that accretive value and that growth, again, which we'll touch on a little bit later, is going to pay big dividends in the future here, and not too far off. So with that, I'll pass it off to our corporate development team, Drew Clark and Sunny Sara, to run you through some of the exciting updates that we have today.
Thank you, Brett. So back in December of 2022, we announced the acquisition of the Llama royalty. Now, this is a 2.5% royalty on a massive project in Argentina. Originally, the Llama project was seen as a big open pit with the Pascua side and the Chilean side called Pascua. And since then, Barrick has begun thinking of Llama as a standalone operation with the massive amount of infrastructure in the area, along with the Veladero project, which is a couple kilometers away. So they committed up to $75 million to assess the potential here, and they plan to make a development decision in 2024. The way they envision this project is as an underground block cave project with the crazy amount of infrastructure there. And through all the exploration spend they've already committed, they found significant intercepts of almost 2 grams per ton over 100 meters, 300 meters east of the resource. They've also announced that there's a massive long-term potential in this porphyry at depth, which has a footprint of over 2 kilometers by 1.5 kilometers. So we see this as a massive project with massive upside for Metalla shareholders. And we picked this up for $7.5 million US dollars back in December. And now I'll let Drew Clark tell you guys about the other acquisition we completed right before then.
Awesome, thanks, Sonny. So Sonny and I today are going to touch on the more recent transactions and more recent updates on some of the assets that aren't quite at the forefront when we speak to investors a lot of the time. But if you're looking for a real history of the Metalla story, Brett wrote a synopsis in this book, The Rise of the Royalty Companies. That's written by one of our directors, Douglas Silver, who's recently been inducted into the Canadian Mining Hall of Fame and is really an authority on it. So I encourage you guys all to take a look at the book, just for an overview of the sector as a whole. But just getting into the more recent transactions, First Majestic deal was the largest deal we've done as a company. And before getting into the details of this, we're a precious metal royalty company, and we increasingly started seeing our NAV kind of going towards the gold side, which isn't necessarily a bad thing, but we're quite bullish on silver as well. So as a result of this transaction and a couple others that we can get into more details, we took our NAV per share on a consensus basis from around 17% to 28%, which is pretty meaningful. We would suggest, based on our NAV on a consensus basis, over 300 million US. So those are real additions to the portfolio. The First Majestic deal was a great deal for us. It added immediate cash flow with Llama. It's a primary silver mine. We got a gold byproduct on it. Last quarter, it banged out over 100 ounces. We got 100% of the gold, up to 1,000 ounces per year, and it's going to provide some real top line revenue to the company. And of the 8 assets we acquired for the 20 million US, 4 of them are near-term development. A lot of them have existing mills, infrastructure, and permits in place. These are really, really great assets that are very difficult to find in the silver space. Trust me, we're looking. So be able to pick up a mature portfolio like this is really something we're quite proud of. And at the same time, I mean, there's a tremendous amount of exploration upside. I think in aggregate, we're a little over 175,000 hectares on these properties. And these are on the most prolific silver trends in Mexico. These aren't ideas of where there might be potential mineralization. These have past production on them, resources, and are really top-rate assets. And just to close off here, we thought we paid a pretty compelling price. We did add one of the premier silver miners on the planet in First Majestic, who now comes in as our largest shareholder. So we're pretty excited about that. Next slide. 2 we just touched on. I wanted to give a quick update on. These are our 2 new producing royalties. La Encantada I just spoke about, and it just did 170,000 ounces last quarter. There's a long life ahead of this mine. It's never had a ton of reserves in front of it, but they've got such an excellent history of replacing reserves and actually finding ounces from outside of the reserve. And we expect it to keep going for a long time. And then lastly, our other recently added producing asset is El Realito. This is Ignito's asset. It's a satellite deposit to La India mine, and they've been aggressively producing from this pit. We expect to see a really big year out of the mine from this year and probably into the next year. It's not a massive open pit, but we're going to get a lot of real cash flow out of it for at least the next, call it 6 quarters. Next one, sorry. This is one that's, so I've been at the company now for 5 years. This is one of the first deals I did with Brett when we joined. We bought a company called Val Gold. We bought Val Gold for just under 5 million US. We purchased it and it had a 2% royalty on the Garrison Mine, as you can see outlined here. Garrison is now part of a large, almost 12 million ounce resource that's controlled by Mineta Gold Mines. And they recently put out a PEA that actually has the Garrison pit and the 903 zone and the John Pole zone, which all sort of make part of our land package, the very start of the mine plan. We have 5 years of very heavy ounces coming out of the mine, 250,000 ounces a year at a 2% clip. And the consensus NAV on this is now in excess of 22 million US. This is a great example of us kind of getting ahead of getting positioned ahead of when the consolidation happens. And when we bought this asset, we had a view that this would eventually turn into a major deposit that, quite frankly, we wouldn't be surprised Metalla isn't the one that puts it in production. Next one. Two very quick updates, not quite as sexy as the splashy drill hole, but these are permitting or sequencing related that are important to us because they do actually serve as value for us as shareholders of Metalla. First one is Central Gold. We bought this in 2021, and it is a absolute sleeper in our portfolio. It's going to do 160,000+ ounces a year. It's a massive land package, 120,000 hectares, 25 kilometers of strike. There is a legacy injunction on it that was something that I think might have scared away some of our competitors. We structured the deal so that a lot of our payments come when the injunction is lifted or the permitting goes through. But the court, the land use concession that was kind of holding up this injunction has been removed, and that's like the last permit for them to submit to the court to have the injunction removed. I know injunctions and permits are a little bit boring, but this was very exciting, at least for us internally in Metalla. And then lastly, one more to talk about that we don't talk about very often is 15 Mile Stream. This was once part of Atlantic Gold. It's now in St. Barbara. It's a producing asset out in Nova Scotia here in Canada. There's 3 satellite pits. Of them, there's 50 Mile Stream, Beaver Dam, and Cochrane. Originally, Beaver Dam was supposed to go ahead of it. They've now turned and looked at 50 Mile Stream. In their own words, it's got a bigger resource. It's got better grade. It's now going to go ahead, and we expect that to come online and call it the next 5 years at a minimum. And it's worth noting that both of these assets in aggregate will average almost 3,000 GEOs a year. So these are parts of our portfolio that we don't touch on often that we think have a lot of value. And I think I hand it back to Sonny here. There we are.
Thanks, Drew. So moving on to more of our development assets. One of our assets called Wasamac that was originally at the Llama Gold. The operator Llama Gold has recently moved to Agnico along with the Canadian Malartic operation. And now Wasamac is being envisioned as a 200,000 ounce per year production profile that will likely be milled at the Canadian Malartic mill that is not too far away. There's about 40,000 tons per day capacity or extra capacity there. So it makes a lot of sense for them to begin that operation there. And they're currently projecting that to begin in about early 2027. And another growth project that we have is Santa Gertrudis, which is down in Mexico. Agnico released an updated resource estimate of almost 2 million ounces of gold in all categories and about 10 million ounces of silver in all categories. This project continues to get larger. It's an open pit with a mill component. The underground mill component would be at the Amelia deposit where they have more than 3 grams per ton material. And the open pit would be Heath leach where they have more than 1 million ounces currently drilled. And the 2023 drill budget is about 10,000 meters. And Agnico had not too long ago outlined that it could potentially be in production in 2025. If we move on to the next slide, this is an acquisition that we completed in 2020. It's a 1.35% NSR on Côté and Gossan. The royalty covers less than 10% of the Côté deposit, but all of the Gossan 5 million ounce resource. Now, Gossan has only been drilled to half the depth of Côté, and Côté is more than 10 million ounces. So it shows the potential upside in this development project. In 2022, they drilled about 15,000 meters, and some of the highlights there were 2 grams per ton over 342 meters. And some of this drilling was completed to the south of the resource. So we are expecting a large increase to the 5 million ounce resource there. And in the Côté life of mine plan, there is a dip in the grade. So we're expecting that the Gossan project will be a really great fit into the Côté life of mine plan at the end of the 2020s. Another $3 million is budgeted for 2023 to assess the depth potential of the mine or the deposit, and we're looking forward to getting potential cash flow in early 2024 from the Cote deposit. Now, if we move on to the next slide, Agnico had recently announced that they are expecting about 20 to 40,000 ounces of ore to come from the amalgamated Kirkland deposit. Now, this is a near surface high grade deposit where they recently released a 100,000 ounce reserve estimate, and they continue to drill it at depth and increase that near surface ore mill feed for the Macassa mine. Elsewhere in the camp, in the Kirkland Lake camp, the camp flow royalty is a sleeper royalty that we bought from the Alamos portfolio back in 2019. They recently put this royalty into the Canadian Malartic camp, and they're assessing the potential as a near surface open pit gold mineralization where at Canadian Malartic Mill, they'll have 40,000 ton per day mill capacities beginning in 2027. So we're very excited for the amount of exploration spend being spent at Camflo, and we'll have a 1% NSR there. So Brett will run you through the growth prospects of Metalla going forward.
Thanks, Sonny, and thanks, Drew, for those updates. Very, very exciting updates. But going back to the strategy of the business, when we looked at how to acquire these assets, again, keeping that high quality and going out and picking them up on an accretive basis that will deliver value not only at the time of the transaction, but as these assets are being advanced by these major operators, we focused our business and our strategy on near-term development. And that was a decision that we had to make. That was a tough decision to make in the very beginning because there was always a lot of pressure to chase what we felt was more marginal cash flow. And kind of fast forwarding 5 or 6 years now, we felt it was a really great decision because the marginal cash flow that was bought or chased or paid high prices for over that time is now having a very, very difficult time being redeployed. And in fact, a lot of that near-term high quality development has not only kind of doubled or tripled in regards to reserves or resources on these properties, but right now, going forward, the whole profile of the company is set to change. And again, this is where you want to position yourself as an investor. When you look at what's in front of us, some very, very significant assets that are advancing towards production by some very, very large companies. You've got Tocantinho. This is going to be about a 200,000 ounce production type of operation set to go into production in 2024. You've got Cote, again, we touched on that. This is going to be about 500,000 ounces a year. And then as Gossan is incorporated, that'll probably either remain the same or potentially even get scaled up further. You've got Santa Gertrudis, which likely will be around 150,000 to 200,000 ounce production profile annually. So very, very significant assets. Castle Mountain will be over 200,000 ounces. That's going to be a top 10 gold mine of production in the United States, for example. Wasamac, potential 250,000 ounces per year, which will be a top 10 gold mine in Canada, as another great example. So as we're getting closer, you'll see that all of that growth, all of that near-term development is becoming closer and closer to production. And as we move through over the next couple of years, we're going to see our portfolio go from a few thousand gold equivalent ounces to what we believe will be 20,000, kind of upwards 20, maybe even more than 20,000 over the next 5 years. And with significant further upside potential built in beyond that. Where we believe that there, is likely going to be at least kind of one new, very significant royalty that likely comes on kind of every single year for the next decade. So having the discipline to buy that high quality growth, again, at accretive prices, let these major operators really deliver that value from a royalty perspective. Royalties are free carried, they're non-dilutive, and they result in top line cash flow. So these are types of assets that you can wait on. You can wait for these royalties to become more value. And in fact, they almost always do when they're located on these proven geological trends, and they've got big mining companies, in aggregate, spending hundreds of millions of dollars with your benefit as they advance. So this is something that we're excited about. This thing is going to be a major catalyst, along with some of the catalysts that are mentioned by our team on some of these assets. We think we've got a lot more great updates coming throughout the rest of the year. And again, when you look at the valuation, when you look at where we sit as a business at a discount to NAV today, and the consistent accretive growth, again, that NAV per share growth, which is so important for you, the investor, as these things always will revert to their mean over time as we move on. So with that, I will open it up for some questions on the Q&A here. So the first question, which is a very common question that we get on the dividends, again, going back to that growth chart, you see that we have a significant expansion starting in 2024. That goes into 2025. And we believe that, the underpinnings of our growth will be significant to not only reinstate that dividend, but continue to raise that dividend over time as we get more of these assets in production every single year as they continue on. Another question here is there risk with the low share price on a hostile takeover? What I can say about M&A, just in general, is that I believe that the majority of the M&A within our peer group is probably mostly done. I think their potential is maybe a little bit of M&A at the very, very top end of the royalty sector, probably a little bit more left at the bottom. But when you look in kind of the meat in the middle, I think the majority of that M&A is done. Again, a lot of the companies that had vulnerabilities in some shape or form somewhere in their business or their capital structure, were taken out. Metalla made a kind of conscious decision to not only make sure we were in a position of strength, but make sure that we were able to not only make our way through to be able to see what the opportunity was on the other side, but to be able to capitalize on it. And so I think Metalla still continues to sit in a great position from that perspective. I've got another question. How can we follow the NAV or the net asset value on a regular basis? So the easiest way to do that is just go to the website. We publish updated numbers every month in our corporate presentation. So if you go to the website, you download the presentation. As those presentations are updated, those NAV numbers are updated. And those NAV numbers, by the way, those are analyst consensus numbers. So we've got a handful of some very high quality banks that cover us. That is another way that you can get those NAV numbers if you have access to the research from the banks. Currently, we have Scotia, Bank of Montreal, PI Financial, Haywood, and Cantor Fitzgerald that cover us. And so that is another way, is to get access through your broker to that research. But we do compile all of that and put it on a consensus aggregate in our presentation. So that's kind of the easiest way to follow that on a monthly basis. What do you think the fair value is of what do you think the fair value of MTA is today in the US dollars? Also, when do you see MTA having a PE? Fair value, I would again go back if you want to think of it from a NAV per share perspective. Currently, our NAV per share in Canadian dollars is a little over 8. So if you adjust that to US dollars, that will give you the underlying value. And what that means for investors that don't fully understand that is that if you take all of the assets that we have, that we've bought, and you take all of the ones that we see a path to production that have the reserves of the resources connected to it that are quantifiable in 43-101 format. And then you discount that cash flow back to today. That's the NAV. That's the net asset value of the business. That's the value of what we have bought in the future today for today's gold price. And so that's kind of the bar. Now, what I can say is that in bull markets, we'll see royalty companies trade, upwards of 2 times, even over 2 times NAV pretty consistently. In bear markets, we see those multiples decrease. These are the opportunities that you as an investor need to be kind of aware of to be able to capitalize on these. And right now, we're at the lower part of the cycle, where right now we're trading around 0.8 times NAV or so. Back in 2020, we were up in the mid 2s. So these do fluctuate over time. And a lot of it just has to do with the investor sentiment with the general sector. We are in about 4 different ETFs, so we are exposed to the general flows within the market. So another question is, when does Metalla estimate to be cash flow positive? And we're basically right at cash flow break even from an operating perspective, not from a net income perspective. From a net income perspective, we'll likely show a loss for some time, but a lot of that has to do with our tax structure, with the way we deplete assets. But when you look at the actual operating cash flow that we have, that covers the cost of the business, I'd say it's right around positive right now, or about break even. And when you see the different assets that will come online, again, very significant assets, as Drew noted, just talking about 2 of them, has the potential to do 3,000 gold equivalent ounces with just 2 assets. And right now, our whole portfolio of production on 5 is doing that. So you can see some very, very significant step ups. Again, that will all draw into the PE. And when that starts to happen, obviously, that is the time as we'll, put the dividend back in place and continue to raise it for the foreseeable future. We've got another question here. It says, agree on undervaluation. How is the revenue structure fixed or related to stock? I don't quite understand exactly what that is asking, but the revenue is tied to the assets that we have. We have royalties that are a certain percentage, and based on that percentage, based on the output of the mine, that will be the number of ounces that we get that translate into the dollar amount. If you were looking for something else, please retype that question. Another question we've got here, in a bear market, how low does the NAV typically go for royalty companies? That's a difficult one to answer. I mean, when you look back historically, you see some wild fluctuations. I remember in the last webinar that we did back in May of last year, we had an example of Silver Wheaton, which is a great company. It's now called Wheaton Precious Metals. I believe it's running around 20 billion market cap or so today. And we saw that company go from I can't remember exactly what it was, but it was a pretty significant premium to NAV, down to something that was a fraction of NAV. So during specific times, these things do have pretty significant swings, especially if it's a smaller company. Again, as an investor, that's why it's so important to understand, okay, well, what is that NAV per share? If the NAV per share is going up and the share price is going down, well, that represents an incredible opportunity to exploit that the market doesn't understand. And, over time, again, these are the safest assets that you can buy. They're non-dilutive. They're free carried into perpetuity, meaning there's no further capital outlay once we buy them. These major mining companies are spending hundreds of millions of dollars every single year that are going into these assets for our benefit, for your benefit. And so when you see these types of fluctuations within the share price, within the underlying value of the asset, that those are definitely the times that you want to be picking up these shares, positioning for the market or the kind of the next cycle in front of us. I do see a question of directors selling shares and concerns around that. One thing that we do have now is that we've been in business now. We started this company about 6 years ago. Most options, we have a 5-year time horizon and then they expire. So, you know, as we move forward, a lot of these options that we issued 5 years ago, they are going to expire. Most of the options that we have outstanding are in the money as we significantly grew the company over time. And so there will be exercising of these options, but it's not necessarily selling the stock. It's the options are expiring. They're in the money. They need to be exercised. So I wouldn't worry too much about that. Another question here is, what is the outlook of the gold price in this strange times? That is a very tough one again. You know, I used to have quite a bit of an opinion on the gold price, and that is one thing that continues to perplex me, and I feel most of the analysts within the sector. What I can say is that, look, we've got a great business. This is a business that, as you can see, we've been able to execute consistently since the very beginning. We're buying really great assets. We're seeing a lot of advancements with these assets. We're seeing the value increase on the assets that we've bought. And, you know, again, going back to having a sustainable strategy, I mean, think of another business where all of your competition disappears within 18 months, something that we could have never, ever envisioned even just, you know, a year ago has happened. So we're excited. We're excited. We think we've got a runway here to really scale this business. The companies that are bigger than us are the mid-tiers. The mid-tiers all grew very, very significantly over the last 12 months. And they kind of went from around $1 billion market cap up to $2 to 3 billion market cap. And so we're still sitting down here today around 300 million market cap. And we see a very kind of wide open runway that we can continue to grow. And we've got all the growth built in. I mean, that's really the key. We've done the heavy lifting. And so, you know, we can continue to focus on our strategy. At the same time, we're going to have all these different assets coming online, and we can continue to buy more high quality accretive assets. We let them grow. They come into production on the back of these major mining companies. They deliver you the shareholder value. That's where we're at within our business right now, going forward. So we'll do a couple more questions here and then we'll wrap it up. I'm trying to get to all of them. But if I have missed any, again, you can send them via email to Christina and we'll definitely get back to those. I've got another question. Have you the expectation that the Beaufort mine can be profitability and put back into production? We do think that that mine can be put back in production, can be profitable. You know, unfortunately, this is a terrible market for very, very small mining companies. This was a legacy royalty that we acquired through the Alamos portfolio originally. But, you know, again, the Beaufort mine has a lot of history. It used to be one of the you know, premier mines in Canada for a very, very long time. And, you know, again, we like exposure to these proven geological trends. So, you know, we definitely hope the best for Monarch Mining to get that one back on track. Are we going to do a share buyback? Not in the cards today, because we have a lot of assets that we're looking to buy. Obviously, we have to raise capital for those. Obviously, we need to make sure that the ones that we do buy and that we will raise capital are on an accretive basis to continue to deliver you guys, the shareholders, that NAV per share increase. But down the road, yes, we'll look at all options. And that's not too far down the road. As you look at this growth, it really starts to ramp up in 24 and then 25, 26 and so forth. And so, As all of these assets come online, we'll look to reinstate the dividend, continue to raise the dividend, buy back stock, whatever, is kind of presents the best opportunity for shareholders at the given time. Quickly here, we'll do a couple more. I see a question that says, what drove the somewhat significant declines in NAV in March and September 2022? Usually this has to deal with the consensus gold price. So as the gold price moves up and down, the analysts will slightly move up and down their kind of gold price expectations. And so this will have, little bumps when you get those gold price changes. Because obviously that is a significant input to the value of the company when you see some of those moves. Let's see here. We'll do one more, and then we'll go ahead and wrap it up here. It says, how will the gold and silver production change over time, and what is it currently as well? The gold and silver production, I'm assuming that's asking from kind of a NAV perspective would be the best way to probably answer that question. I don't know, Drew, if you've got the exact numbers from a kind of NAV perspective on gold and silver, but I believe, if I recall, I think it's around kind of mid 30 range on silver, and about kind of mid 60 range on gold. So enough exposure. Again, silver was something that we wanted to pick up more. We feel like we're at the right part of the cycle for silver to outperform, and so that had kind of a pretty significant impact in some of the last few acquisitions that we did. So with that, thank you all for joining us here today. We appreciate the engagement. We've got, tons and tons of questions in here. And look, things from the business side are looking really good. We believe that the share price will follow. And this is just a great time to be able to exploit that opportunity here before we get into this next cycle. So we'll leave it at that. And